So the question becomes, is now a good time to buy?
I think now is a great time to buy, but that is an individual decision for each homeowner, and that is a different set of circumstances and variables for everyone, which is why you need a trusted real estate advisor to guide you through that process, why you need a trusted financial advisor to guide you through that process. Now,
welcome to the Best of Raleigh with your host and real estate expert, Gretchen Coley, owner of the Coley Group. This show is all about the people and places that make the Raleigh area so special. Here's your host, Gretchen Coley.
You know, real estate is a really local thing, and it can be different here in Raleigh versus Durham. I am here today with one of my trusted partners, Cedric Burke, who is the Senior Vice President of CrossCountry Mortgage, and we are having an enlightening conversation on the mortgage markets, what's happening, and why you should be taking notes. So, Cedric, thank you so much for being here with us on the Best of Raleigh today.
thank you for having me.
So I got a couple stats I want to drop first.
All right.
Number one, the FHFA says that home prices have risen 5.5% in the third quarter of this year. They also say that the rate of appreciation that started to slow in the second quarter of 2022 has now sped up in the third quarter of 2023. Those are national stats. You know, what do you think about that?
Well, I think it's very accurate, and I'm glad you pointed that out, and we're starting on that note because all we hear is pessimism and doom and gloom. And I'm an eternal optimist, so that's very difficult for me personally to deal with because I believe we control our destinies. And, you know, what we put in is what we get out in our industries. So in terms of those averages, I think what we're seeing is an adjustment nationwide where now there is a realization that rates are high. And what we saw from the 2021 through early 22, we saw the highest in terms of period of acceleration rate increase since the mid-90s.
Yeah.
And so it froze a lot of people. And I think now people are adjusting. You know, we have a generation that has never really seen rates above 3%. And, you know, go back.
Sorry, guys.
So this is an adjustment. Now we're back in a normal market.
Yeah.
As you know, this is historically where rates have been. It's in fact still on the low side.
Yeah.
If you look at historic averages. So you have that adjustment happening where I think people are coming off the sidelines. You know, people are making those decisions that they may have changed their budgetary standpoints in terms of what they can afford and may have a different trajectory, but there's definitely an excitement and infusion back in our market, which is causing these appreciations. Now, we still have a nationwide lack of inventory. You know, so we still have that dynamic going on. We still have tons of folks who have rates in the 2s and 3s that are hesitant to sell. We have, in general, most of our population has equity in their homes. You know,
Which is a great thing.
Yes. So now I think we're seeing the wheels moving again where people are taking advantage of those opportunities, and we're definitely seeing some appreciative opportunities.
You know, it is a rare thing when you have higher rates that have increased very dramatically, as you said, and you have appreciation or higher appreciation, and you have low inventory. That's like a trifecta.
Yeah.
Right? It's not always the case because usually when you have higher rates, your housing prices decline. When you have lower rates, housing prices increase if you look at historical data. I think it's important to note that. And the other thing about these stats are that these are national stats. And I want to talk a little bit with you about the long-term trajectory, national stats versus local stats,
Sure.
because real estate's local, right?
Yeah. Yeah, absolutely. And we happen to, you know, be based in probably the strongest real estate market in the country right now.
Raleigh, North Carolina.
Yeah, so we're extremely fortunate to be where we are and do what we do. Now, yes, I think you look at market dynamics. So when you look at our immediate market, we're primarily a primary home market, meaning most folks are coming here to leave. You know, we're very blessed and fortunate to have great jobs, great universities, a constant influx of folks who want to live in our markets. Now, you compare that to other markets. You look at more speculative markets, some of your Florida markets, your Vegas markets, your Cali, your coastal markets, where those are mostly second home or investment property markets, and they react a little bit differently. You know, if you're making speculative decisions, you're making those after you secure your primary residence. So we're very fortunate in that most folks we interact with and we're consulting are looking for their primary residences, and that's a different buying decision. So I think that's definitely added to the strength of our local market.
It is really captivating because we do have so many things in this market that continue to make it rise. And it is confusing for people. I read a stat that said that 60% of the people who are coming in and buying a home in Raleigh over $1 million are coming from 5 different markets across the United States, which is crazy to me. I've been here for 20 years. It's amazing. So the question becomes, is now a good time to buy?
I think now is a great time to buy, but that is an individual decision for each homeowner, and that is a different set of circumstances and variables for everyone, which is why you need a trusted real estate advisor to guide you through that process, why you need a trusted financial advisor to guide you through that process. Now, so that decision varies for everyone. Now, I think now is a great time to buy, and I think you've had a lot of folks who've been waiting for the downturn or waiting for a crash.
It hasn't happened.
It hasn't happened.
But everybody is saying the crash is coming. Where is it?
Well, this market is different. If you go back to the 2008 crash, that was mainly led by the financial institutions, lack of capital, lack of foresight in some decisions. This is different. This is a lot of this is driven through COVID, which I think we need to address because that has significantly changed our markets.
Yeah.
We talk about local markets. Our market is more advantageous than it was maybe pre-COVID.
I
When
agree.
you look at someone coming from New York or from California or from these big markets who want some land, want more affordability, want the ability to work from home, and those are more affordable decisions, and that decision is made easier than it was
Yeah.
maybe in a pre-COVID environment.
Absolutely it is. And they can get a little bit larger of a house. They've got a little more room to spread out and they can get incredible schools. So now, I do think that with rising interest rates comes opportunity. There are opportunities all over this market, opportunities for to be able to have time to evaluate the home, to be able to maybe make an offer at ask price or less, which was unheard of during COVID. And then there's the opportunity to maybe get some seller incentives that can help with rates, right? Tell us a little bit about those, what you guys are doing.
Absolutely. So we've definitely transitioned to a buyer's market. And as you mentioned, COVID was a seller's market where you were buying sight unseen. There were these crazy due diligence fees. It was just a wild
It's
market.
like the good old days.
Yes, and a market that was very intimidating to a first-time home
Yeah.
buyer, or maybe someone who didn't have the cash to make a humongous down payment to compete with some of these, especially investors coming from other
Yeah,
areas.
or a move-up buyer who wanted
Yes.
to move up, but they didn't want to sell their house first. Like, it was a very difficult market for them.
100%. So now we're in a market that's fair, where you can take your time, you can make a smart decision. Now, in terms of leveraging opportunity, yes, we're in a market, it's a buyer's market. Sellers need to move properties. So we're seeing selling incentives higher than we've seen in years, where sellers are willing to pay closing costs. We as a lender are trying to be aggressive in this market and work with our trusted partners and give any advantage we can. We're offering to our partners credits on listings, where they can list lender credits to help them move properties. We are working in conjunction with sellers where we may add on to that incentive they're already being offered, which offers the opportunity for temporary and permanent rate buy downs. We partner with associations like North Carolina Housing Finance and other services that offer down payment assistance programs. So it is a market where you have the time to make a wise decision and choose a loan product and an advisor that makes sense for your situation.
I love that. And it used to be that you only saw those kinds of incentives on new construction. Well, now you guys are getting really creative and are helping to put together packages for a lot of our listings that are benefiting from that. And we're so grateful for you. And our sellers are so grateful. And they didn't even know they needed it until we showed it to them. But we gave them a vehicle to make sure that they were able to keep their price where they wanted it and be able to use the leverage of a little bit of additional support in order to help a buyer get a drastically lower monthly payment, which is awesome.
Yeah, so this market you have to be creative.
Yeah.
And I think that goes for both of our industries, and those who are finding success right now are those who are embracing that opportunity and trying to solve the puzzle.
Yeah.
I have to give a shout out to Paul Norman, our trusted partner with Gretchen, and he's having one of the best years of his career. And the fundamental baseline of that is he's putting families in houses, and I never want to forget that and diminish what he's doing to numbers, because it's far more than that. But he's done that by having a good partner who works in conjunction with him daily, to find solutions. But I've seen him reinvent his business 3 or 4 times this year, based on what the market has dictated. Right now, in conjunction with Gretchen, he is really pushing the temporary buy downs. where it may not make sense for someone to buy a rate down that they're probably going to refinance within the next couple of years. But there's temporary options where you can get a lower subsidized rate. The buyer recoups those funds if they were to refi or sell, so it's a great advantage for them. That is something that a seller, a buyer, or a lender can pay for. So there's creative solutions. A couple of months ago, I saw him really leveraging down payment assistance products, which open up opportunity for many buyers who may have been priced out of their ideal price point. And so I think the key is being on the front foot, being proactive, not reactive. Not letting this market dictate to us, but dictating how we're going to help folks get in homes.
This show is sponsored by the Coley Group, the #1 real estate team at Compass in the greater Raleigh area. We love serving, we love coaching, we love advising. So if you're struggling with some of these questions, if you're thinking about buying or selling, we would love to help you. And this show, The Best of Raleigh, drops once every week on Fridays on Apple, Spotify, and on YouTube. So if you like what you're hearing here, give us a follow and make sure you're notified and you're staying up to date on everything in Raleigh, not just real estate, but the people and places who make Raleigh so special. And we are here to guide you home. We would love to help answer some of your questions and make sure you're connected with the right partners for your needs. So that being said, for someone who is renting right now, there is the question, does it make more sense to buy a home than to rent right now?
That's an individual decision. Personally, I think.
Quit saying that. I'm just kidding.
And I always have to caveat by that because
we have a trusted partner. He's
Yes.
going to tell you the truth.
And to be very honest, there's some folks we tell them maybe you're not ready yet.
Yeah.
Maybe you need to work on certain aspects, whether it be down payment, credit, qualification. In general, some folks aren't ready yet, and this market has shown us that with these rapid rate rises, there were marginal buyers who right now have been priced out.
Yeah.
And we don't want to see them overextend themselves and put them in a bad situation. That's part of our fiduciary duty to our clients and our partners. Now, that being said, it is still a phenomenal time to buy. And the benefits of home ownership, one, our local market, we've talked about the appreciation stats as a wise investment, but also just that there's intangibles that come with home ownership, and we've touched on some of those, but just the security, the safety, the aspect of and it goes far beyond just the appreciation, the security,
It's hard to build a life without a home, right? Yeah. That just came to me. And I guess you can do it, but, I grew up living in apartment with my mom and, moving, and I never really was able to establish myself as a child. And when it comes to building a life, I believe that home is a cornerstone to that. And I'm not saying that you can't do it renting. You certainly can if you're not bouncing around all over the place like I was. But, there's something to be said. There's a lot of stats that we could look up that people who own homes stay in their jobs longer. People who own homes gain more wealth. People who own homes tend to live happier lives. And and as a child of someone who didn't have a home, that was a hard thing for me. So home is so much more than a mathematical equation, right?
Yeah, it is a foundation.
Yeah.
It is a foundational pyramid that's so much else in life built on.
Yeah, it really is. So where are rates going in 2024? What are you guys preparing for? I need to brace myself, or am I ready to fly high?
The question of the hour. and if you listen to the smart folks and advisors that we trust, those forecasts are all over the place. Now, I think as we all know, rate forecasts have been a mixed bag for several years. We were predicted to be at a much lower point than we are right now. Now, that being said, we have an important Fed decision tomorrow. Inflation is coming back in line. The overall prediction that is that at some point next year, probably by mid-year, the Fed will start lowering rates. The most trusted forecast we have right now, the national average is about 7 1/8. We think rates will be somewhere in the 6s. Probably mid to upper.
You never thought you'd say that, did you?
Now, the most important part of that's a two-part discussion. We've seen a few dynamics. So over the last few years, not only you look at where a real rate is, but also the cost of that rate. The costs have gone up significantly. And a lot of that is because from a lending, lenders have been losing money.
Yeah.
Let's be honest. This has been a tough couple of years. So lenders are pricing in extra security measures where in an expected market where rates will drop relatively quickly, we hope, a lot of these loans are going to be refied. So the cost of securing a rate has gone up to protect lenders. Now, I think we will see rates drop in general, but also the cost of borrowing will go down. And so the cost of that rate in the mid or upper sixes may be less than it is to get the par rate 7 1/8 right now. So that's another factor. So it's going to get cheaper. Now, what we really think the acceleration will happen late next year and into 25. I personally think 2025 may be the best year we've collectively ever seen.
Wow. From a rate standpoint, from a real estate sales standpoint, market standpoint.
Now, not purely rate. I don't think we're going to see rates in the 2s and 3s again.
No, I don't think
Yeah.
we're ever going to see that. But I think what we need to retrain ourselves to, and I think we are doing a good job of doing this, is that rates in the 5s and 6s are like normal.
Yeah.
That is a normal real life scenario, and to expect anything less than that, I think is foolish because I don't know that we'll see that again. But I do think, even at a 7% rate, that you're still beating the system.
Yeah.
And so why not?
And I think a lot of our conversations have changed in the sales cycle and consultation cycle. I hear Paul having this conversation all the time. Is, hey, do you want to talk about rate or let's talk about your payment? Let's talk about the other aspects of this, because I hate to tell you, but you missed the lowest rates in history. So this is no longer timing the market to get the best rate ever. This is making the best decision for your family. And let's talk about different products, different down payment options, and how you leverage existing rates to still benefit you. So it's just a different conversation than it was a few years ago.
And it is a conversation, and that's really what it has to be, is having a trusted advisor who's going to be able to guide you through that process. And be creative is the one thing that I've heard you say over and over and over.
Yeah.
You've got to be able to think outside of the box and have someone whose heart is in it for you. And I think mortgage becomes very transactional, right?
It does.
Real estate agents, we tend to work with people from a relationship standpoint, but a lot of times people come to us and they say, oh, I've already, gotten a loan from online X warehouse here. And I'm like, okay, well, we need to really look at that loan because there may be some better options for you, because typically they haven't taken the time to really be creative and figure out, is this the best scenario with that person? And with working with CrossCountry, we've been able to form such a friendship and such a relationship over the last 4 to 5 years with you and with Paul, that we can do some different things, that we're thinking on a different level than most people are thinking on. And I think that's a benefit to everyone who works with us.
Sure. I think from our perspective in a sales cycle, the first 30 minutes of any introductory conversation should have nothing to do with rate. It should be about, what are your short and long-term goals? What do you want to do for your family? Where do you see yourself? How long do you plan to be in this home? Understanding their buying decision, and then we can guide them better. And, when we get a call, what is your rate of today? We don't have a rate of today.
Really?
We could have 10 different rates depending on your scenario, because that changes based on your down payment, your credit score, and tons of other factors. So I think it's important to have someone who will explain all of those different layers, the associated risk, and ultimately help put you in the best position possible for you.
I think that's the quote of the day. We don't have a rate of the day.
Yeah.
I love that. Well, Cedric, how can people find you all?
They can find us online. I'm cedric.burke@ccm.com is my email. I'm usually behind the scenes, trying to keep the train on the track. So I'm not as customer facing as our boy Paul Normit, but we're always here.
But he's
ready to help.
usually at our client appreciation event. So for all of you who want an introduction to Cedric, you come on to our client appreciation events, and they are always there mingling with our clients, because they are out forming relationships with our folks just like we are. When it comes to getting a mortgage, when it comes to buying a home, we have people reach out to us all the time. We love answering questions, whether you're buying in 6 days or in 6 months or 6 years. So if you're thinking about making a move and you'd like to pick someone's brain, I'm here for you. You can reach out, just call me, text me, email, or schedule a Zoom call, and somebody on our team will be right there with you to guide you, and we'll make a fantastic introduction to CrossCountry Mortgage, to Cedric and to Paul, and get that relationship started. Thank you so much for joining us today on the Best of Raleigh. This has been an enlightening conversation. I always love checking national news with local news and real people. And that's what this show is all about, introducing you to the people, places, and businesses that make Raleigh so special. We'll see you every week on Apple, Spotify, and YouTube at the Best of Raleigh. See you in Raleigh.